We are talking the meltdown in the world's second largest economy, and can it spill over into U.S. equities? I'm happy to welcome back to StansberryInvestor.com Peter Grandich of petergrandich.com. He's also the author of Confessions of a Wall Street Whiz Kid. Peter, welcome back. Good to see you, and welcome to our summer series.
Well, it's always a pleasure to be interviewed. To me, the most objective financial journalist I was ever interviewed by, so I don't mind doing this at all.
I am always honored to have you on, and thank you always for your support, Peter. Happy to get your thoughts. It's a while since we've last spoke, and it really is a mid-year touch base, so I'm interested to learn about your exposure these days. But first, let's talk about what's happening. I'm looking at numbers right now in Hong Kong's Hang Seng index. It's at its lowest level since November 4th, 2020. And I just want to pull up a quote by someone I follow closely. It says Sven Hendrick, founder of NorthmanTrader.com. He's questioning, are they, China, concerned about an asset bubble and they're letting the air out before it pops hard and does more damage? Or are they the canary that says the recovery has already peaked, or both? One wonders if either of these are true, then U.S. equities are at a risk of spillover. Now, I found this really interesting. We are at a crazy level of euphoria here right now, Peter. How do you see it?
Well, first of all, you talk about a gentleman who's most enjoyable to read, both from a humor standpoint as well as knowledge standpoint. And I think the answer, to me at least, is both those points are correct. I think it is the canary in the coal mine, and I think they are trying to let theirs down before the bigger effect, if they didn't, would come when ours eventually bust. To put it in perspective, in July, I told people for the first time, I never really liked to use this word, but I had to, in that I was petrified of where we stood in terms of, the general stock and bond market. And the complacency is at levels that are off the meter. And so first thing I said is I personally hope before the year was out to have cash as my single largest position, which hasn't been in decades. Then on Friday, after many thousands of points thinking of shorting the market, where I would have gotten my head handed to me if I did, I actually took a short position, and it's the first one since January of 2020. So obviously I'm not in the bullish camp. I do think there are a whole host of factors, but and that's the asterisk, and I don't like using that word. That's not a word that should be used by people that are giving advice or opinions to others. This is an most unusual time. We've not had markets where literally the Fed has created what I've coined monetary heroin. And once you're addicted to it, and that's what Wall Street is, they're almost at a point where if they tried to even wean the addict off of it, it causes all sorts of issues, and that's the problem we have. And anytime that there's even a hiccup in the stock market, there's a call for more of the monetary heroin. Problem is that China, we could argue, is very close, equal to being the world's #1 economic power. They certainly are in a better financial position to us. They're not indebted up to their ears as we are. So if they're starting to do this and they're starting to see this and feel it's reason to, I'll just remember an old saying that a wonderful man who's long gone but was a wonderful newsletter writer, Kennedy Gamage, said, and he says, we used to say this about Japan, now I substitute and use China. If China has sneezes, we can get a cold. And it'd be very hard to expect the U.S. stock market to continue going much higher without the Chinese and Asian markets and emerging markets participating. So I think it's at least a canary in the coal mine.
I mean, look at the headline, Peter. Tesla reports more than $1 billion in net income in Q2. That's up tenfold from a year ago. And I know offline I was saying, don't tell me they've sold that many Teslas. I mean, how much higher can we go here?
Well, it's like bottle rockets. I don't know if you did it when you were younger. Even though they mostly should only go a distance, there was always a couple that almost came like a Roman candle, went twice as far as anybody thought it can be. That's kind of the stage we're at. I like to tell people it's like on that meter where there's the danger red zone. That red zone has a wide spread. We're in that red zone, but it can always tilt a little bit more before the whole thing blows. So, can it go up another 5, 10, 20% over 1 month or 6 months? Yes, but I think the bigger question is, and this is what investors always complained about. They would say, hey, you Wall Street guys always tell us when to buy, but you never tell us when to sell. And my answer has always been simple, but I think it's very sane. And that is, could you first step in today and buy what you own without any reservation? I find most people hesitate when I ask them that. And I think that's the first signal. And I certainly couldn't begin a general equity or bond portfolio. And if I may just add, bonds at 1% or 1.5%. The consumer price index is at least 3. I think it's higher. But bonds are an automatic loss if you buy it now at 1%, just based on the current inflation rate. Yet, people are raving that you got to get in the long bond. So, like I said, we could spend hours talking what I think are a lot of concerning points. But I just think this is the time to be a live chicken versus a dead duck, and that's how I'm acting.
I'm really happy you brought up the bonds angle and how that's a critical point for you right there. Before I dig a little deeper, just on a more general point on the economy, I know you've been critical of this current administration, but I just want to talk about the disconnect here that we're seeing in the stock market. On the flip side, we have this $1.3 trillion infrastructure plan, a Build Back Better plan. I just want to get your comments, if you can talk to overall the current state of the economy and this complete disconnect, like I said, between the stock market and reality for so many Americans.
Well, at least for about half of Americans, and I'm one of them, I believe that if you took the producers and writers of the movie Sting along with Weekend at Bernie's, they would both be super impressed how they were able to get the gentleman who currently is sitting in the White House not only in, but to stay there. And I think we're seeing signs that Weekend and Bernie's is not too far away. So and why I bring that up, not just to be sarcastic, and I'm only half sarcastic because I'm half worried too because of that. But why I bring that up is Wall Street advisors, which over half have only been doing it since the last financial crisis, so they don't even know what a bear market looks like. The swoon from the pandemic only lasted a few weeks. They have not taken into account something that years ago, I'm in this 38 years, was very important in your analogy, and that's geopolitical. No one's taken into potentially how politically. Well, let me just tell you this, Danielle. One thing I know for certain, other than the United States Civil War, I don't think America's ever been more split socially and politically. There is no more middle ground. You're either left or right. And sooner or later, no matter what the stock market thinks how it can separate itself, political, social factors it will impact the economy. And I think we're at that point. And so with $3 trillion, with $30 trillion of hard debt, talk about interest rates supposedly being normalized again. Okay, so let's say they go back to 5%, Danielle. That's $1.5 trillion in interest expense. Hey, our best year was 2019. We took in 3.5 trillion as an economy. Half of the money is going to go just to pay interest. We can't sustain this. This is unsustainable. Doesn't mean it can't keep going like that bottle rocket, but we're well past the point of what I like to call the old movie failsafe. There is no return. There is a big price to pay. Unfortunately, Daniela, people like yourself with young children and all, I think they're going to pay the dearer price than somebody that's well advanced in the natural life.
Okay, good thoughts there, Peter. So let's break it down in terms of your exposure, your plays right now. You brought up cash before, and I'm seeing a trend. I've been doing these interviews for a very long time, and this year, more than any other year, more and more of the experts who have come on my show are telling me how they're completely exiting the banking system, one after one, repeating the same story. They don't want cash in the bank. What I'm hearing from you, though, you still like holding a percentage in cash.
Well, there's a great debate, and people talk about the banks unwinding, and that's one of the things why the bitcoins and cryptocurrencies have gone and so forth and so on. I don't live in that total doom and gloom atmosphere, simply because my faith is my life is not all caught up in just this one. I'm counting on that there's something else besides it. But even if you are just looking at this as it, first of all, if we ever got to the point where the United States couldn't make good on money that was in banks, there really be no other place you could escape to. It will impact everything and everywhere. So I'm not going to not keep money in the bank because I think the whole thing is going to blow up. Are there other alternatives to have Yeah. For instance, I would sooner be in the Canadian currency right now. I would sooner be in the Australian currency if I was looking at it from a currency standpoint. But so long as the United States still has the taxing power and still has the ability to pay anything that's 250,000 or less, I'm not going to keep it in my, even though they're not paying me anything. But what I say why to have cash is not because I love the dollar ending, because I think assets like general equities and bonds are going to come off a lot over the next couple of years. And I want to be in a position to enter them when the pendulum swings to the other side, if the good Lord still has me here.
He will. We need you, Peter. You got to stick around. And to that point, you recently you tweeted this photo that I want to use today of two boats. One filled with people on, as you call the Bitcoin and equities boat, and then you have another boat which you say you're on with three of your other gold bull friends. You feel like a lone wolf in your quest and exposure to gold here, Peter?
Well, it was kind of you say that there was three others. I feel sometimes there's only maybe one or two, but I haven't seen a lack of bullishness for gold since when I first returned to it 2018. In fact, that's what ended up. I had not done an interview for almost 7 years, and you were kind enough to bring me back to talk about at that time, $1,200 or $1,300 gold.
That's
Why
right.
do you like it? Well, even though we're up closer to 1,800, the sentiment factors are as bearish, if not more bearish. And realistically, even the ones that were like permabulls that would always be speaking, they seem to move on to someplace. So the boat is pretty empty for a true gold bull. Now, listen, I don't ever expect Main Street, Wall Street to embrace it. In fact, they're going to always look at it as kryptonite, because if you're selling financial assets as a livelihood, you don't want to sell something that really contradicts that ownership. But what's really interesting, besides all of that, that the people who used to be so negative 10 or 20 years on gold are among the positives, and that's central banks. They continue to be net buyers of it. That's also because I believe that they recognize that eventually the dollar won't be the reserve currency. And, we can go into a long story about that. But the other factor, of course, trades into a potential investment off of that is the major producers, the mining industry, I'm not talking about the juniors that are, taking a shot somewhere, has never been in better financial shape since the day I entered it 30 something years ago. And it's really interesting that at a time when finally they really have their act together, they've cleaned up their balance sheets, they've gotten conservative, they're in the best, cash flow, free cash flow, things that are coming that we never used to see in producers. And hardly anybody talks about it or wants ownership in it, and they're off in another world. So that contrarian of me just makes me gyrate back to that. But if I may just add quickly, we can't discuss it, even better than the gold market, even more to me positive likelihood of a great turnout is the uranium market. There, I think a perfect storm has come together, and we haven't even begun to see the best yet for what I think is going to be a tremendous bull market run, and which I believe will be the best bull market I ever participated in.
Why do you feel the bullish case for uranium here? What are the top fundamental driving that right now?
It's very simple. Everybody's talking electrification. Everywhere you talk, everything's going electrification, even airplanes, all of it. Well, we've already seen the troubles that we're having now providing electricity during heat waves and things of that necessity. We're going to have a need to electrify. And yes, infrastructure and all that has to be done. But solar and wind and all those other things that everybody talks about is just no way going to be able to support all that. Nuclear energy has to be a key part in this movement to green and carbon free and all that stuff. Never have we seen the supply and demand scenario more bullish. And what's most interesting about that is you can put on one hand and count the producers in the uranium business. So if and when Wall Street or whoever wakes up to that factor, their natural tendency is going to be, hey, let's go to the people that sell this stuff. Well, you can count on your hands. Cameco is, to me, the bellwether. But that will spill down to even the more riskier, exploration companies and so forth and so on. And those utility companies, basically, most of them, their long-term contracts are ending this year and next. They have to go in there now to assure themselves to have the proper at a time when the supply and demand scenario has switched tremendously favorable. in demand side. So it's a market whose market cap, if you take all the uranium stocks, doesn't even equal a Franco-Nevada. So I just think the uraniums are screamingly bullish. And I think if I had to own one group, would not own anything else, it would be the uranium group.
Okay, so your bet would be on uranium. Just getting back to your points on gold, there are two things I want to bring up. Yes, like you said, I know, and I followed your career for a very long time. You entered back in 2018. You bought all the way up until gold hit 2000 last year. What are you still buying now at these levels, or are you good now?
Because I've become more cautious overall, and all markets, including the uraniums, will be hit if there's a very sharp sell-off in the stock market. They're not going to somehow all stay up. They may not stay down as long, and they may not come off as much. So I've narrowed my focus in the gold market to a handful of producers and one or two special situations. If I'm allowed to mention them, I will.
Sure,
if that's all
go
right.
ahead. Yeah, you can mention them.
So when you look out there, like I said, the producers have become, the major producers have become very, very strong. I mean, to have the GDX in your portfolio now, I think is just a good natural way if you're not very versed on following all the individual ones. But there's been a unique opportunity now in advanced stage exploration companies because so few people are paying attention to them. Now, I have to tell you, I'm extremely biased when I mention this. I own 9% of the company's stock. So obviously I'm going to see everything as, half as positive, but there is a company called American Pacific Mining, and it has the uniqueness that I've searched for years in a business. It has the right management. It has unbelievable projects, and now has the support of a tremendous financier, someone who I will call the next Frankie Juster. Okay. And you know how I feel about Frankie Juster. I think he's one of the best people that ever walked in the natural resource industry. So I think there's much more opportunity to find things that are still undervalued in natural resources, the uraniums, than trying to pick it in the technology industry or some other industry that's that's gone up to the sky.
But okay, so apart from your two special cases in mining, the other miners you like, are they juniors, producers? Are they the Newmonts? What makes up that group?
I'm sticking with the majors, so I think that's where most people should stay. And there is diversification in some of these ETFs that play the juniors. I think it's very much more difficult to be a junior resource company now. The marketing ability, the capital raising, you're being shut out of markets if you're not an exchange traded fund, and also, and I just don't follow it that closely anymore to
and you
give out advice about it.
So you'd rather be in the GDX than the GDXJ?
I would be in both, but I'd be more weighted up towards the majors than the
okay. So going down the list now. Okay, so you're in physical gold, you're in mining stocks, you're in cash, you're in uranium. Are they equally weighted here, or is like you said, uranium's your favorite now? How are you breaking this down?
Well, I never like that cookie cutter when somebody says 20% this, 30. Everybody.
And here I am asking you.
Everybody's different. Listen, I don't mind you asking, because like I said, you are the most objective person. You could be on the complete opposite side and people would never know that. And that's a talent that God blessed you with. But listen, that cookie cutter stuff is good. What I would just say is I would sooner own things uranium and gold than technology and start trouble for me, cryptocurrency. Okay.
You mentioned it. Now I got to go there.
Can we stop now?
No, and please, Bitcoin cyber hornets, leave Peter Grandich alone. This is his opinion. He's allowed to share it. No nasty voicemails, please. You mentioned Wall Street acceptance of gold, and I want to bring this up. Because I started covering Bitcoin when it was $3, okay? And it has surprised me how Wall Street has embraced Bitcoin. And I don't know if you would agree with me here, Peter, but there's now talk that Amazon may start accepting Bitcoin, but apart from Amazon, we have JP Morgan, we have Square, we have Visa, we have PayPal. Yeah, we never saw this on the gold front. And how long has gold been around? Does that surprise you a bit how Wall Street has warmed up to Bitcoin, but not ever gold?
So let me get a different form of hate. Now the hate will come from the people that work on Wall Street when I respond to you on that. I only have to go back to the last financial crisis. Now, the last financial crisis was caused because too many people were sold mortgages and mortgage type investments that should have never bought them. And guess who sold it to them? It was mostly financial service firms who not only sold it to them, but actually sold it to them in the short position that they didn't own it. So they not only made money when they sold the product, but then they profited it from when it fell. Now, it was hard for the average investor worldwide, especially the average American, to understand that because it was terminologies that they just didn't comprehend shorting hard. The bottom line is, the way I describe it is, imagine if you went to a car dealer and they sold you a car knowing full well it was going to crash. And on top of it, they bought life insurance on you. So when it crashed, they collected twice. That's what Wall Street did. And I can go through a series of other things that they've done. So just because Wall Street has gotten behind a product, to me, isn't the good housekeeping seal. Now, there are some good people that are on the other side. Because as you know, I really didn't comment on this until we made the all-time high. And then I put out this thing, sell all your Bitcoin. And boy, did that create an interesting few weeks for me. But there are people that I think are proponent that are on the bullish side worth listening to. For instance, you have this gentleman, I don't know him, Vince Landy, that comes on.
It's fancy, yep.
He paints a very credible, bullish reason to be bullish on Bitcoin. And if I can tell just the people out there one thing to grasp onto, when I spoke at all these conferences, you used to cover them and all, most people came there not to learn. They came just to get confirmation of what they already believed. In investing, you have to keep an open mind. I have to keep an open mind. Just because I think negatively and view this product as a negative now, I still have to keep my ears open because I may be missing something. It wouldn't be the first time I lost. You know, a lot of things, Wall Street has a terrible thing. They were like Fonzie. If you remember the Happy Days show, he couldn't say I was wrong. I've learned to say it. You know, I've lost enough money to be able to say it. So I would just keep my mind open to this. And it's great that Wall Street's behind it. But what seems to be against it is the people that still control the game, and that is governments, central banks, etc. And that's what I said, until they can get that acid test and get past it. And to me, everything looks like they're coming out against it. But here's the saving grace. Just like the internet bubble, we're going to have a bust. There's not going to be 8,000 or 80,000 cryptocurrencies. There's going to be a shakeout. And out of that will be born some great companies. I think Bitcoin will suffer because it was the first, just like the first in any technology. There seems to be, in my view, better cryptocurrencies, better opportunities being born. And I think as people realize that, Bitcoin will lose its share.
Is there one you like? Excuse me.
I don't want to get into that because it just opens an ore of people that I just don't have time, or quite frankly, I don't want to have to peek out my house to see if I can go out and
But
it's okay. Because that's what happened last time. And I face that. But I do think it's an industry that's here to stay. So I think it'd be a mistake. Like, you know, there are these negative guys that have been around for a while that always knock Bitcoin and they just blow up everything. And they say they're wrong. This industry is going to more than survive, but I believe it has to go through a tremendous shakeout. And since I'm not positive on the stock market, and that turning down will make Wall Street have to take a step back and watch money and not be able to be as, you know, wild as it's been in this, that's not a positive either. So my simple answer to you is, yes, cryptocurrencies are here to stay, but I wouldn't be a buyer of them right now.
Okay, that's a yeah.
I hope that neutralizes some of the people out there that otherwise now are like, I want to shoot this guy.
I think that's a fair statement. We were saying offline, it's like showing up at a Philly game with the Giants jersey. So
yeah, that's like just asking for trouble. So, you
know. So we won't do that. So getting back to equities and just some, so are you completely out of US equities right now, Peter?
Yeah, I don't own any general equities that aren't related to uranium, gold, and copper.
Gotcha. So in terms of warning signs, you said we could touch on them, and I'd like to a little bit. Just if you could tell me your top 3 or top 2 or just one, if you like, of really the red flashing signs that are saying, you know, get out of equities now.
Well, the flashing sign we already discussed, the number one, the fact that Wall Street does not take into account the political ramifications of what's happening politically here in the US and socially. It is not in the formula or discussion in most other financial networks at all, and should be, because they play a role in it. The second thing is, you also touched on, as you normally do, you're usually ahead of the crowd, and that is what's happening in China. You cannot not look at that.
Right.
There's just no way, if they continue going lower, we're just going to keep going higher. I'm certain there'll be some guys on there and gals that'll say that, we separated ourselves and all that, but we haven't. And then I think the simple thing is that eventually you have to recognize that we are a country that has really gotten itself in the hole debt-wise on every level, federal, state, corporate. And one last point, which people haven't been making, I never thought I'd see this in my career, Daniela. The other day, so-called junk bonds or high yield bonds were yielding lower than the CPI index. It's just unbelievable that something we used to call junk, we know right now is going to pay us less than what the current inflation rate is. I just don't conceivably can't bring myself to look at bonds in any way, shape, or form. And quite frankly, that's a very scary thing. And maybe I'll end with this part. The fixed income market has been destroyed by the Fed. And that's the last part of my business. I work with a group that specializes in retirement and business and exiting and estate planning. The retirement business is completely up in the air. There's no longer any safe, secure, principal secured investment out there. People have to now take risk to their principal in order to maintain some sort of financial stability, retirement, whatever it may be. And that's something we never thought was going to be when we started in this business. And that's the thing that's not being discussed by Wall Street, but will when eventually the market implodes. And then people realize that, hey, how do I do? How do I keep maintaining my lifestyle? Because I can't keep making 5, 10, or 20% like it's simple.
If I may, one final note on gold from you, because back in April, I remember you really liked the technicals for gold. You said a cup and handle formation was forming. It was a beautiful scenario. Gold really should have broken out. And here we are today, and a lot of people are questioning, when are we going to get back to at least 2,000, that nominal high again? How far away are we from seeing that again?
Well, again, there's not that many people. What's left is just a handful of people, and they tend to be the people that always been in gold. Those are the people that are concerned, and expressing that. There is really no interest at gold as an investment in any real investment portfolio analogy these days. Even less now than it was when it was $1,200 or $1,300. That alone, that contrarianism in me, that bet against the crowd, that guy that always said, oh, he can't miss this field goal. I turn to a guy and go, I'll bet you he misses it. It's just, that's my nature. It's always been what's kept me above board. It tends to be too early sometimes, but one thing about investing, you'd rather be a year too early than a day too late.
I'm laughing because you brought up the sports analogies, and if I may share what you did at the start of the interview offline, Peter brought on Joe Klecko for a phone call, surprise phone call. Completely caught me off guard.
Well, you're a diehard Jet fan, and your husband is. And, I was privileged to work with a lot of athletes for 20 years, but what's happening in sports now and social justice caused me out. But I just thought I'd surprise you because I know how much of a diehard Jet fan you are.
Beautiful surprise. That's why every time I interview you, I never know what's going to happen. So thank you for that. And Peter, thank you for joining me as part of the summer series. And one last point, if I may, I know you recently celebrated your 40th wedding anniversary with your lovely wife. So congrats on that beautiful milestone.
Well, let me say something to you, which I know because people write to me. It is an extreme pleasure and honor to be interviewed by you. And your listeners don't recognize how fortunate and blessed they are. Because I know when I see you do other interviews that you're on the other side of the coin of who you're interviewing, but you don't attack them. You give them a chance to share their views. And in a nice way, you bring up points that kind of point out where they may not be. And I have to tell you, that's a blessing and gift. And I just hope you keep it.
It means a lot to me, Peter. Thank you so much. Thank you for those words. And again, thank you for your time. Come back soon to StansberryInvestor.com, okay?
Well, thank you as always. God bless to all.
In the meantime, if you want more premier content, special offers, and a lot of other great stuff, don't forget to sign up free at danielacambone.com. That's it for me.